What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. I want to say I am very thankful for the support we had in our last video. You guys just popped out of nowhere. I am so surprised at how good that video was after taking off 3 months. You guys are helping this channel bounce back already. I really appreciate it. Let's try and get this video to 700 likes for the YouTube algorithm, guys. Once you smash that like button, all it does is just send the video out to more people that are interested in the SoFi stock. You're doing me a favor and you're also doing yourself a favor because more people are going to learn that this is a great opportunity right now at this given moment. This video I got for you today is very exciting. I want you guys to know that, and you're going to be very blown away when you see, the type of numbers that I'm looking at right now. SoFi really underestimated in their earnings expectations for this full year of what they're really going to do, and I believe they did that as a precaution because of this environment we're in. So they really pulled back their numbers, guys. When I look at what we just had in that Q1, these numbers are looking insane. So be sure to drop a comment, guys. I'm going to be commenting back to as many people as I possibly can. You're going to be very excited for this video. Let's get into it. All right, guys, so check this out. This is the Q4 2022 presentation, not the one we just had, but the one a quarter before that. And this put out the guidance for full year 2023. And I know when this came out, a lot of people got, underwhelmed. I got a lot of comments. I remember there was some other YouTubers that I'd have to agree with. We were just like, wow, these numbers look a little soft. I believe SoFi did this once again to cover their butt, so that they're not putting out crazy numbers that they can't meet, and analysts, are starting to adjust their numbers way too high. So these numbers that we saw were pretty underwhelming. Remember, guys, we had the 25% growth on the low end prediction and then the 30% growth on the high end. When I saw this, I was like, oh man, like that's a big, pullback from, what we just did last year, which was 53%. When you're talking 53 to 25, you got a little bit of concerns when you see that. Also, EBITDA, did take a nice jump from 260 to 280, which I like, but I'm telling you guys right now, once we look at these numbers we just had for Q1, these numbers, I mean, we're looking at some blowouts heading our way, especially for, growth in EBITDA, guys. We're going to take a look at that. So when the last earnings came out, you can see the guidance right here. They already started adjusting the guidance immediately. We know that SoFi does this every quarter. Look at this. The prior guidance was 1.925 to 2 billion, which was 25 to 30% growth. And look at that. They already slapped on 20 million. It may not seem a lot when you add on 20 million, but guys, look at this. That's 27%. The bottom end, the 25 is already disappearing. And then we just added another 1% on the top end. So that brings us up to 31% growth. So as you can see, if you continuously do that every single quarter, slap on 20 to 30 million on your guidance, and you beat it at the end of the year, you're looking at another percent, another percent every quarter. They did the exact same thing with EBITDA. So now you guys know that these numbers, have a lot of room to go if they just keep adjusting it little by little. So look, the 280 just got topped out at another 8 million, so 288 million. The same thing at the bottom, another 8 million. So if we just look at what type of numbers they did for this last quarter, what we're going to be doing is predicting, the next couple of quarters to show you guys, how truly off that those beginning numbers we got in Q4 were. So we know that SoFi did 76 million in EBITDA, and the quarter before that they did about 70 million. Assuming that they just, continue the same type of earnings that they did last quarter, which I truly believe they're not. I think we're going to see better earnings in the back end of the year. But assuming they just could do that continuous, 6 million on EBITDA. So assuming that we start out with what their Q4 guidance was for the full year of this year, 2023, 280, and we just start off with those same type of EBITDA numbers the last quarter, Q1, and we just had the same type of growth, that 6 million jump. We're looking at 75 million, 81 million in Q2, 87 in Q3, and 93 in Q4. And I truly believe, guys, that these numbers are going to be underestimated. We're going to see a random quarter have a big jump in EBITDA. This brings us to $336 million of EBITDA. That is a pretty big jump when you take a look at what they started with in Q4, 280. So this is what SoFi likes to do. They like to build up a lot of cushion. And I absolutely love this because you're beating analyst expectations. You keep raising every quarter. And this is what we're looking at for estimates, guys. 336, almost a $60 million jump from what they, gave us. And the same exact thing goes for revenue, guys. When we saw that 25 to 30, it got you a little bit, underwhelmed. But take a look at this. They just added on that 20, and if they keep adding on that 20 million, that brings you to 2 billion, 20 million, 2 billion, 40 million, 2 billion and 60 million, and then 2 billion and 80 million. And assuming they just beat that guidance a little bit, guys, that brings you to 2.1 billion. We did about 1.54 billion last year, guys. That's 37% growth. So when you saw, that 25% to 30%, that's a big jump, guys, and earnings expectations for the full year. So I believe SoFi is doing this to cover their butt, and that's 37% growth without student loans, I believe, in the guidance, or maybe they're putting it into Q4. I'm not sure. I don't know how they did that. I can't exactly remember, but just, with what they got predicted right now, we could hit 37% growth, guys. This is absolutely amazing. It goes along with a Q4 net income. That adds in all your stock-based compensation and stuff like that at the end. So a profitable quarter, I believe, in my opinion, just like the last video you guys watched, we're talking about 20 to $50 million. And we'll finally get a PE ratio happening. Now remember, guys, $336 million in EBITDA. That is extremely solid when you're talking about a growth stock investing for the future. And if you take a look at Michael JBURY, this guy is a big short seller in the market. He's always talking about valuations. This guy is giving you the green light. He put this out about 9 months ago, guys, and read this. This was a tweet he put out when the market was still a little bit crazy in 2022. This morning, there were still 218 primary stock listings in the United States with a market cap of over 1 billion. Remember, SoFi right now is right around 4 to 5 billion, and EBITDA less than negative 100. So we're talking losing on EBITDA, negative. 29 of them had a market cap over 10 billion. That's double the size of SoFi, totaling 655 billion in market cap. Saying it all the silliness must go, guys. So we're talking about 336 million in the plus, okay? So we literally, if we just go back a couple of months to when he, wrote this tweet, we're a better company fundamentally and profitability than these 218 companies. Probably 100 of them were SPACs or, newly IPOs and stuff like that. So guys, I mean, he's telling you he's not going off of net income on this tweet right here. He's talking about EBITDA. EBITDA is important, okay? It's the step before net income. It just shows you where your profitability is headed in the future. So negative 100 million. SoFi is potentially going to be hitting 336 million. I mean, what is that, guys? That's a, almost a 400%, difference going negative to positive 300 plus million. I'm really liking where SoFi is heading right now, guys. This bank charter is doing us wonders. And, once we, get rid of, stock-based compensation continuing to drop lower and lower, you're going to see, EBITDA just skyrocket even faster in the future. So this is very, very interesting to me, guys. Once again, I remember the reason why I'm making this video is because I haven't made a video in about 3 months when the Q4 earnings came out for the guidance for 2023. So I'm catching up for you guys and telling you, that guidance was a little underwhelming. But look at what we're seeing, guys. A $60 million jump in EBITDA and a 25 to 37% growth projection. That's a 12% increase. So you need to be really excited, guys. I believe these numbers I'm putting out for you right now, I believe these could still be underestimating SoFi's potential EBITDA and revenue growth numbers. I think this is pretty close, but the ones they gave us were definitely underwhelming, just like some of the other YouTubers said, and a lot of them weren't concerned just like me. But when we actually look at these earnings that we just got, we are looking for some nice growth this year too, guys, and we're under book value on just our, total equity. We're trading under JP Morgan's, like book value right now. They're at 1.4, we're at 0.08 or 0.9 or something like that. So I'm really liking where SoFi's at once again. If you made it to the end of the video, I want to say I really do appreciate it, guys. I enjoy doing these videos for you. Once again, I'm just getting caught up, because we've taken 3 months off. And this video should get you really excited. I mean, can you see how I'm making this video? I'm excited. I mean, these numbers are pretty solid. I mean, we're out of the super bear market territory with, Michael JBURY talking about negative 100 million EBITDA companies trading over $1 billion. So we just surpassed those 300 companies he's talking about, guys. We are heading for some very, very good, profitable quarters next year. We might get one in Q3. You never know. We got Q2 on the way, and I think Q2 is going to be even better because SoFi was still sorting out some things, buying that last company for mortgages and stuff, and maybe mortgages come back in the back end of the year along with student loans. We just have to wait. But remember, guys, those have been two segments in lending that have been pretty much gone for 3 years, and then mortgages for one. Student loans 3, mortgages 1. If we get these back, guys, we could be looking at a very, very profitable fintech, unlike the other ones. Upstart's losing 100 million. Robinhood's still losing millions. Lending Club has completely paused their earnings growth, so they're just looking to just stay afloat. I think SoFi is going to be one of the most profitable in the future, and I'm really liking where we're headed. I'm going to be buying this stock most likely this week because, we went back down 30% after earnings. That is absolutely incredible. So be sure to smash the like button. Let's try and get 700 likes on this video. Don't forget to drop a comment. I'll be commenting back to all of you guys. Expect a lot of SoFi videos coming in the future because this company has, did its dues of, investing in the future, taking its losses. We are about to scale really hard, guys. We're heading for 10 million users, most likely in, 2024 or, close to that. Once again, my name is Kyle. Hope you have a great day.